Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. As you guys know, I created my channel to help as many people as possible become independent and profitable traders, no matter which market you're in. So, if that sounds like you are in the right place at the right time. Welcome back to my channel, traders. I'm so excited to make these videos and make them short and sweet so that you guys can grasp these fundamental concepts. I do have a lot of different playlists where you can focus specifically on things like market structure, candlesticks, and entry points. You can contact me. My information is down below, or you can even register for a personal mentorship. I actually have a self-guided course that comes with an app where you can watch videos in order that will help you build on your trading knowledge. So if that sounds like something you're interested in, make sure that you lock in. The information is down below, and I will be closing the mentorship program at the end of 2024. So in today's quick video, we are going to be doing a trade breakdown. This is a type of video that I post often where I review a trade idea that I shared with my students. Now, one benefit of registering for the personal mentorship program is that I do live sessions every week, and I do post trade ideas so that you can learn and earn at the same time before you feel confident to trade on your own. Or if you're already a trader, maybe you just want to increase your profits, this is definitely a good option for you. So in this trade breakdown, this is going to be a part two video. I rarely do part two videos because I wait until the trade completely plays out. But in this case, we're going to be doing a continuation of this USDJPY trade just because it continued to sell so much. So in the first video, the USDJPY trade breakdown, we secured 110 pips as the market hit TP1, but ultimately we were able to secure 345 pips in this trade. And not only that, this was our biggest trade for the week, and it sold even beyond that. So imagine having the patience to be a swing trader, you would have been able to secure even more pips than that. So we're going to be looking at USDJPY, and here's where we left off last time in the first video. Now, if you didn't see that video, I'm just going to review that we did enter this trade for a sell because of some simple confirmations that we noticed. Now, the first thing I noticed was the market had hit a swing high, and a swing high is going to be the highest place that you can see on your chart. Now, you don't have to be an expert trader or a professional to see that this is the highest place I have on my chart. Now, another thing you should know about any type of financial market is that sometimes it goes up and sometimes it goes down, sometimes it goes up, sometimes it goes down, sometimes it goes up. And you'll notice that, for example, in this case, the market hit the swing high, it went down, and it came back down to a previous low. Now, the important part here is when the market went back up and tried to climb, it never got as high as the previous high. Now, excuse my silly drawings, guys, but I really just want to highlight exactly what I'm talking about. So we have the swing high. Once we had the swing high, we had a sell down to a previous support. We had the market buy, but when it bought, it didn't get as high as the previous high. So that was my first selling confirmation. We have lower highs being created, meaning that although the market is still in this ebb and flow of buying and selling, every time it buys again from a sell, it doesn't get as high as the previous high, letting me know that this is a selling market. Not only that, if we look at our stochastic, when we hit the swing high, we also had it crossing below the top line, which for me is a perfect entry indicator for a sell. Now, let's look here where the market also crossed back down below the top line. We have selling. We can also see here the market crossed below the top line, and we also have selling. So that was a very strong indicator that the market was going to continue to sell. Now, not only when it crosses the top line is that a sell confirmation, but if it crosses below the middle line, which we have here for more sells, and then even below the bottom line, these lines are perfect levels to look for if you want to enter or exit your trade. So I saw that the market rejected the swing high. It didn't get as high. And then it crossed below the bottom line. And this is where we would have been able to stay in the trade or to confirm that the market was going to continue to sell. So first crossover down. This is our entry signal. And then if we have the second cross down from the middle line or the third cross down from the bottom line, this is confirmation that the trend is going to continue and that you should feel confident to stay in that trade. Now, like with any pair, the only thing you really have to do is be able to identify these previous levels of support or places where the market bought and these previous areas of resistance. So in this case, we had TP3, but I'm just going to go ahead and add some more TPs just so we can see how simple this can be by using horizontal lines and support and resistance, right? So we're just going to go ahead and put some more lines there. We're going to take this down to the hour. Let's zoom out so we can see these levels, and we're going to see what actually happened in this trade. So we had already hit TP1, and we saw that that previous area of support now became an area of resistance, moving the market down within our second channel. We see TP2 hit, and by that point, we had secured 223 pips overall. We see that the market dropped to TP3, securing 304 pips. And then once the market reached 15190, that was about 345 pips. And that's about as far as we rode the trade out. So I was super excited to see that this trade not only respected the levels that we have marked up, but we were able to secure profit. The first biggest trade that we had this week was for gold. It was a quick gold sell because gold did end up ultimately buying. But watch how this market continues to drop and to touch on these very specific levels. Now, trading isn't rocket science. Again, it's a matter of, can you identify what the highs are? Can you identify what the lows are? Are you able to identify a break of structure, which means that the market is no longer staying within a particular channel? It's going higher or lower. So I really loved how this trade played out. USDJPY is not a typical pair that I trade. Tend to stay with Euro USD, GBP JPY, and I am getting more into gold, but this was an amazing opportunity. And that's one of the benefits of knowing how to trade. If you see something, you can trade it, right? And it's nice to go outside of your comfort zone sometimes because the pairs that you typically trade may not provide you an opportunity. Now, this isn't saying that you should jump all around the market and trade everything, but do have a few different pairs in under your belt so that you can hopefully find something more times than you can. So if this video made sense and it was helpful, just go ahead and drop a 7 in the chat down below. And if it made sense to you, don't forget to subscribe. You can go back and watch part 1 to this video, or you can watch any of the other trade breakdown videos that I have. Now, if you would like to join my personal mentorship class where you have the opportunity to get on a live session every Sunday, or you are ready to copy some trade ideas from the group, you do have the option to register for personal mentorship. And that information is down below in the description box. But that's really all I have for you guys today. Until next time, rich friends.